Hi everyone, welcome back. Anthony Allen, your mortgage broker. Continuing the first home buyer series, and today I'm going to talk about deposit and how the different banks look at deposits and how potentially you can save your deposit and get there faster. So first of all, as I've said all along, the banks are going to consider your deposit very differently. One one particular lender may say that if you've got 10%, if you've got a 10% deposit, then you don't need genuine savings. Another bank might want you to have 20% deposit before they let you off with not having genuine savings. So I've mentioned genuine savings there twice. Let me explain what genuine savings are. So genuine savings are at least 5% of your purchase price of your security held in your bank account for a period at least of 3 months. Now, banks are relenting, but generally the banks want to see that you've had that 5% amount minimum, and it hasn't sort of dropped below there and then gone back up, that you've had that 5% amount for a period of 3 months, and you can supply them bank statements to show that you've had them for March, April, and May, for that window, that you've had those bank statements up until you're ready to buy. There are other lenders out there that have relented somewhat and will allow you to start on month one, and if you don't have sufficient, then during month one and during month two and during month three, immediately preceding your purchase, they will allow you to show them that you've been saving money gradually over that period of time, and by the end of month three, by the time that you're actually putting your application in, that you then have the funds to complete. Some banks will actually give you different options. Say, for instance, another lender may say as long as you have the funds to complete, then they may take your rental payments as genuine savings in lieu of genuine savings. So, for instance, if you've been renting a house with a recognised real estate agent, and you can get a rental ledger for the last, say, 6 months. Some lenders will actually ask for 12 months. But let's say you can get that rental ledger and your payment history is perfect, it's impeccable, you're not late, you've never been in arrears, then some of the banks will be quite happy to take that as your genuine savings, and then you basically just show a balance of your funds to complete, and then you don't need to show that you've been saving that amount for 3 months, because you could have had a windfall or something like that, or a gift. Just while I talk about gifts, generally the banks do not want to see gifts from anyone else other than close family, whether that be siblings or parents. The gift will have to be accompanied by a gift letter that basically says that whoever's giving you those monies, the reason for them to give you those monies, the amount of those monies, who they're giving it to, the purpose of them actually giving it to, and that it's actually a gift that's unconditional and does not need to be repaid, and it'll need to be signed and dated. Otherwise, basically the bank will look at that gift and say, well, potentially it's a liability that needs to be repaid, and then that will reduce your borrowing capacity. Sorry, I digress there. So I was talking about genuine savings. I was talking about that you've had to hold them for 3 months, and generally it's got to be 5%. Some other lenders will allow you to have a mix of genuine savings and the rental statements. So, for instance, if you've got rental statements and you've got 3% genuine savings, then that will be sufficient. Other lenders will be that if you had 10% deposit, then you don't need genuine savings. Other lenders will be that you've got to have 20% deposit before they'll let you off with not having genuine savings. So as you can see, each lender's completely different once again. Another way that you could potentially save money is by writing down all your costs. If you can maybe go through your bank statements and you write down every single cost that comes out in a month or over a 3-month period, you'll start to see patterns of where you're spending your money. And maybe you can start taking, lunches twice or 3 times a week rather than having, eating out 5 times at lunchtime. Maybe you don't need those Mars bars or pies or whatever else. Maybe you don't need Disney and Netflix and Spotify and Amazon and Foxtel. Maybe you realize that you're just frittering your money away, and you can maybe get rid of 2 of those or 3 of those or all of those. What else? Maybe you can talk to your insurer. Maybe you've not reviewed your insurance needs, either your health insurance or your car insurance, and maybe you can either speak to your insurer and see if you can go on a lower policy, or maybe you can speak to another insurer and review insurance, and maybe when you've written this down, maybe when you actually look at what you're actually spending, it will frighten the hell out of you, and you will just, you'll automatically cut down. I remember suggesting to a couple that I once went out to see that they each bought a little notepad, and for the next sort of 2-3 weeks, they actually, every time they spent some money, they actually jotted down what they spent. And then every night or every week, they went through the list and justified it to their partner. And I think I said to them at the time, look, there's potentially what's going to happen is you guys are going to spend less, because I think the guy was a construction worker, and I said, basically, you're not going to eat as many pies, or you're not going for as many drinks after work or whatever else. And 1, you're going to save money, and 2, you're going to lose weight as well. That caused a wry smile. I'm not sure actually whether that worked or not, but there are many ways of actually doing this. So yeah, there's no wrong way to do it. If your money is increasing, you'll probably find that once you actually start to watch how much you're actually saving, like a snowball running down a mountain, that gathers, you'll probably start to gather momentum, and the more you actually start to save, the more you want to spend, the more you want to save, and hopefully you'll get to that deposit amount sooner than you think. Good luck.